We have to be real with you guys. This channel's dying. Sure, we've been growing faster than ever and our views are, through the roof, but Google don't pay the bills, y'all. Crypto kept our RGB lights on. But now that the market is crashing, all we can afford is a single color lighting. It's truly dark times, especially because red LEDs are cheaper to run. No, but seriously, the crypto market in general isn't a happy place right now and hasn't really been in a few months. And even though we're seeing prices of most coins spiking up periodically, they're still trending downwards, much like our faith that BitConnect totally wasn't a scam and will bounce back. Which, of course, there's no hope in that. So there's BitConnect man failed us. But why is the crypto market still tanking? That's a very sneaky way to write yourself into the script, tank. Why is it tanking as hard as it is, and what can we expect going forward? Well, the shorter answer is that no one knows for sure, and I'm gonna get plenty of comments of people telling me that I'm wrong and that they know the true answer. So no one knows for sure. Don't trust anybody except for take everybody's opinion into account and then work through them all. So that doesn't mean that there aren't theories out there trying to explain some of it. And in this video, we'll go over a few of those theories to try to make some sense of what's happening. Now, we won't be going into too much detail because there's not enough time in the world for that, and we'll mainly focus on Bitcoin, as most altcoins usually take 95% of their Q from big ol' B. So first up, bans and scams. The first collection of theories that some believe are affecting coin prices primarily center around the idea that the crash, or price correction, depending on what phraseology you want to use, that we've been seeing is tied to negative public perception. So basically, when crypto is being painted in a bad light, prices drop accordingly. Not too long after coins started losing value faster than Bitmain's new crypto night miners, there were quite a few reports coming out of the woodwork that didn't exactly paint cryptocurrencies and Bitcoin in a great light, and that just helped spread uncertainty, or what people like to call FUD, fear, uncertainty, and doubt. And it doesn't help that UFD is an acronym of FUD, or not an acronym, what's it called? An anagram. We're an anagram. UFD is an anagram of FUD, so people like to play off of that, which is not true. Not true. Okay, so scams and schemes, even though they've always been a part of the crypto market, just like other markets, especially newly burgeoning ones, they became more numerous and a heck of a lot more popular. So popular that even when they inevitably unraveled, like most scams do, they lost a lot of people a butt ton of money, a la the previously mentioned BitConnect. And because these scams were tied to the coin market, a large portion of them being ICOs after all, or initial coin offerings for those who are uninitiated, it soured many people on the whole idea of cryptocurrencies in general. People who have been burned before aren't in a hurry to get burned again, and others assume there's a fire where there might not be. Why would you even begin to do the research on a new technology if you've already been burnt by it? To tell people to trade smart after they've lost their life savings is not really an argument they want to hear after the fact, which I guess I can empathize with. So a bad apple spoils the whole bunch scenario is what we're going for, if you will. So after that, names like Google, Facebook, and Twitter took a stand and vowed to ban certain crypto ads, or all crypto ads in general. And even though these bans were primarily aimed at shady coin-related ads, which is actually a great thing for legitimate operations, but many people reading the headline, "Google bans cryptocurrency ads," they would assume that these companies are against the technology entirely, which it's obviously not the case. But whatever the intentions behind the ban, the theory is that prospective investors were scared off, while those already holding on to some coin felt more pressure to sell. So speaking of selling, point number 2, sell-offs. So another theory that gained a lot of traction as Bitcoin's prices started to fall, and also is a very prominent theory even still, is that Mt. Gox's coins are flooding the market, and that's what's to blame. After a lot of hubbub and lost coins, the exchange unceremoniously went under and filed for bankruptcy in 2014. But a lot of its assets, coins, remained and were added to its bankruptcy estate. Sometime during last year, a trustee of Mt. Gox's bankruptcy estate reportedly started selling off a bit of coin here and there. And when we say a bit of coin, we mean 50 boatloads of coin. The trustee, quote, has already sold 35,841 Bitcoin and 34,808 Bitcoin Cash by start of March this year, according to a report, and according to a wallet believed to be associated with the trustee, even more ridiculous amounts of coins have been pumped back into circulation since then. According to various outlets and traders, this periodic injection of huge coin volumes into the market is largely to blame for the price drops we've been seeing, because when people are selling, that means people have to buy at the lower price, and the more volume you see of coins at a certain price, the less likely people are to buy, and so the price has to go lower, and so the price keeps dropping because people are seeing a large volume of sells, which means that they don't want to buy at that price. They want to make sure it goes lower, and so they're buying at lower prices, which drops the overall price. Basic exchange idea. It's very basic, very rudimentary. I don't want comments telling me how wrong I am, okay? Layman's. Talking to layman's. So CoinDesk reports that after 18,000 Bitcoin was moved on the 5th of February, quote, that day saw steep declines across all cryptocurrency markets. Many other outlets have also drawn correlations between the movement of these coins and subsequent noticeable price drops. Now, of course, correlation doesn't equal causation, but it's hard to disregard this theory entirely. And according to the aforementioned Mt. Gox trustee himself, we'll see even more coin on the move as he plans to, quote, to consult with the court and determine further sale of Bitcoin and Bitcoin Cash. Next up, regulations and paying your dues. The cryptocurrency market is often referred to as a wild west of sorts, a place where coins flow freely from one hand to the next without regulation and interference from the government. I mean, that's the whole point behind Bitcoin, is it's decentralized and no one governing authority can control it. And for many, that's been one of the biggest appeals, but it couldn't last forever. And after kind of turning a blind eye on crypto for many years, after the price boom and scammers that were scamming people losing their money, including to a large degree ICOs, governments have decided to step in. Japan, the US, China, Russia, Thailand, Taiwan, South Korea, Australia, and other countries have all in one form or another either expressed their desire to impose regulations on cryptos, strengthen the ones already in place, or impose a few new ones. Most notably, America's Securities and Exchange Commission, SEC, has kicked into high gear, quote, shutting down the most obviously fraudulent ICOs and warning the public that stricter regulations were likely to follow, according to Ars Technica. The SEC also showed heavy interest in exchanges that traded in ICOs. Simply, the idea that the SEC is keeping an eye on things was, according to some, enough to encourage a, quote, a sharp sell-off in cryptocurrency markets. Along with that, the IRS recently received transaction information on tens of thousands of users of the crypto exchange Coinbase, reminding everyone trading in crypto, in the US at least, that you still have to pay the taxman for your digital currency. This is also used as an explanation of the falling coin prices, and it's a slightly compelling one at that. South Korea is also a major player in the crypto world that seemingly took a strong stance for the regulation of crypto. According to Forbes, quote, regulators have banned foreigners from the local exchanges, hinted at blanket bans on initial coin offerings, and even forced traders to open crypto accounts at brick and mortar banks, end quote. There's also fear among some that many South Korean exchanges might shut down entirely. And since those make up for a large trading volume in the crypto market, that fear is driving down prices too. Whether these fears are legitimate or not has yet to be seen, but whenever an exchange shutters their doors, it affects the price, because typically the prices that people are looking at are not ones that are on specific exchanges, but in aggregate of the whole. So the typical Bitcoin price that you're seeing is pulling from the major exchanges and averaging them out to give you a price. And when exchanges go down, if they're pricing Bitcoin lower than the rest, then you see the price of Bitcoin go up. But if they're pricing the price of Bitcoin higher than the rest, then when they shutter their doors, the average drops quite considerably, which can lower the price. As long as exchanges continue to go out of business, it will continually affect the prices of cryptocurrencies and how they're viewed. But if you're trading at an exchange, it's not necessarily going to affect that exchange's price. Next, people have made their money and are moving on. Now, while it could be that all of these factors, as well as about a million others that we really don't want to get into right now, could all have some hand in the continually lowering crypto prices, it could also be that none of them do, or at least not on a larger trend basis. This is where our crypto guru Pansy Faust comes in. Not only is he extremely skeptical that any of the theories that we actually looked at have an effect on the larger price trend, he provided us with one that he believes explains the whole shebang paying pretty well. A large portion of his argument, as we understand it, is that the smart money has already been made. A lot of the people have already made obscene amounts of cash by selling at the all-time highs and are likely not interested in investing back into the market in its current state. He said, quote, "The psychology has shifted and those who made their money are enjoying their profits and not looking to buy back in because the market structure, even from a cursory look, has changed," end quote. He also states that, quote, "The smart money could still be holding a majority of their coins but have sold to achieve some profit on investment, and that the fact is the smart money stops buying when dumb money starts." So the dumb money in question is investors who kept buying or started buying after prices took a turn for the worse and kept doing so all the way down. Or alternatively, for the people who bought in at the tops because they had the fear of missing out and didn't want to lose out on the higher profits. So we have people who bought at 19,000 who sold afterwards because they realized what a dumb mistake they made and just took the L right on their forehead, because that's how we do it. It's an all-star weekend. But there's still hope. Pansyfaust continued to explain, once the weak hands have been shaken out, basically once people who kept buying all the way down eventually sell out and don't try to buy back, that's probably when we'll get the start of a new bull trend, he explained. A bull trend being when the crypto prices continue in an upward fashion rather than a downward fashion, which is known as a bear trend. So he said it could take months or years, but eventually a bull cycle will return, creating the same fear of missing out and the same bag holders. So while we can't even begin to really speculate on when prices might start heading back in any significant way, just looking at price charts for the past years shows us that they've mostly always bounced back to some degree. And even though things may look bad now, they could always get better. But on the other hand, Bitcoin is dying, sell the dips, buy the highs, it's all over, crypto is dead, why have you failed us? I have to sell the dog and my employees. Think of the dog, Bitcoin. Think of the dog. I can't feed it. But seriously, no one can say with any degree of certainty what the markets will decide to do, and even though that's a large portion of the part of the fun of cryptocurrencies, you should exercise caution when getting into it. And anybody, and I mean anybody, who tells you that they know what the market is going to do is lying to you. Free markets, by their very nature, are random. This is like simple economics. Like, this is, if you go to university and you take any economics course, you will learn that free markets are random. Anybody who figures out a theory has no idea what they're talking about. There's good principles and there's ideas that you can hold on to that can help mitigate losses, but you're always going to take an L at some point. You can't predict every single fall and you can't predict every single raise, and a lot of it is a guessing game. And some people guess right more often than others, but there is such a thing as educated guessing. And a lot of people in the crypto industry and also in the stock market industry when it was big in like the early 2000s, these people take their educated guesses and they explain them to you as if they are fact. They convince you that they know what the crap they're talking about and don't disclose, hey, things might not actually be the way that they seem, and I don't have all of the information, because guess what? If you had all of the information, you would be a quadruplegillionaire, because you could make any decision completely rationally, completely perfectly, and you would have made all the money in the market. Like, and why aren't you betting everything you have at that point? If you know how it's going to go down, why aren't you selling every single piece of thing that you have so you can put all your money, triple, quadruple down on it, and then become a quadruple billionaire? That's the thing that they should be doing if they actually believe their advice. If they knew what they were doing, if they knew what the market was going to do, why are they not going all in? That's my question. Oh, no answers? No answers? Because you're going to tell me. I'm going to get the comments. I know. I always get the comments. I know what Bitcoin's doing. Don't you know that Bitcoin always crashes? Don't you know that you should have sold when it was high because everybody knew it was coming down? No, not everybody knew it was coming down, and not everybody knew to the extent with which it was coming down, and not everybody's going to know the duration with which it's going to stay down. All of those factors are really important because that's how you work the market. You have to have all of that information. You need to know all of the things that are coming out from the governments that are going to affect the price of Bitcoin, but you don't. I'm talking to you scammers, and I'm talking to you people who are so certain of yourself, and yes, I'm so certain of myself because I know the basic economics of a free market, and that's that nobody knows what the heck is going on. And that's why insider trading is so dangerous, because that's when people have information that the market doesn't and manipulate the stock prices and the coin prices to their advantage. And that's why it's illegal, because it doesn't allow for a free market. That's why I can't, as UFD Tech, sell off a whole bunch of my shares when I know that we have to close our doors because Bitcoin's dying, and I sell off all of my shares. Or like when Intel sells the CEO sells his shares right before Spectre and Meltdown get announced. That doesn't look smart. That's not good. That's why there's laws against that kind of stuff, because it's not okay, and it uses the lack of information that other people have to make a profit, which is exactly what most people are against. Anyways, rant over. So exercise caution if you get into it. Don't invest more than you can afford to lose, because you could well lose it all at the drop of the hat. And don't believe people who are so gosh dang certain of themselves, including me. If I tell you something is true, besides the things that are true, don't listen to me, okay? You have to figure that out. Do your research, understand what you're getting into. Don't be the people who buy Bitcoin at 19,000. And that's something that Pansy Faust was also explaining, is just that, like, we buy into it with the thought that we are selling to the greater fool than ourselves. When people bought at 19,000 expecting it to go up and not to just hold on to the currency, they were thinking that there's gonna be an idiot who wants to buy it at 20,000. Or alternatively, people getting into the market have no idea how markets work, because this is something like when I was a kid, I was just like, oh, like if I'm selling stocks, I just click a button on the computer and like nobody has to buy it. I just sell it because that's the price you sell it at. My mind didn't wrap around the concept that you had to have a buyer for your sale or you had to have a seller for your buyer. There's people who don't understand that fundamentally about the stock market, is that it has to take both parties agreeing on the price. And if you set the price on an order and people don't want to pay it, then you ain't gonna sell it. So, I mean, it's both. It's both people believing that there's a bigger idiot than them that's out there, and then there's also the people who don't understand and who are just like, I'm gonna make a whole bunch of money because I bought Bitcoin and I can sell it at 20,000 when it's at 20,000. No, people have to want to buy it at 20,000. So yes, I hope you guys enjoyed this little cursory overview about why cryptocurrency prices are crashing. There's a whole lot of other factors, of course, that come into play. And so you guys, I'm sure you guys are clued up a lot. Some of you at least have tons of information that you can share on me, and why altcoins aren't connected to the price of Bitcoin. And then you can explain why altcoins are independent and always go down when Bitcoin goes down, and how altcoins are better. Yeah, you can tell me that. But let's have a chat about this. I want to know what you guys think. I want to know what other factors you think are very prominent in the cryptocurrency market losing steam. Let me know down in the community Discord, which is the top link in the video description. Come chat with us. Let's have this discussion, or down in the comments here on YouTube. That's perfectly fine too. Smash the like button if you enjoyed this video. Get subscribed to stay up to date on all of our tech related content. I'm Brett with the UFD Tech channel. Thank you so much for watching, and I'll see y'all in the next video, which will not be it might be in this hotel. Yeah, we're in Atlanta. We're moving on. We're going back to Florida today. Tomorrow. Nope, it's 1 a.m. Today. We're going back to Florida today. Yes. Okay. Cheers.